Welcome to the Calgus Fund. Today is Friday, the 7th of July, and it's a wonderful day here in Stockholm. The sun is shining, we've got 20 degrees, and we're in the middle of the Swedish beautiful summer. We're going to talk about the first 6 months this year, and we're also going to talk about H&M, a big Swedish retailer. Okay, this year, first 6 months was really good for us. We were up 23%, which is fantastic, compared to the Swedish index, which was up 11. So we had this 23%, the market was up 11. And most global markets were really good these first 6 months. And the reason behind this, we think, is the acceleration of the global business cycle. Since after the financial crisis, we have had problems in Europe to get some good growth, and the same goes for the United States. We also had a crisis in Brazil and in Russia. These things are now coming back, looking better. So this is the first year in 5-6 years that forecasters are looking to really good global growth, and it's about 3.6% they're looking at, and that is compared to 3.1 last year. This means that it's a good environment for business to increase sales and to improve their margins. So, and I think that's what has made the stock markets go up these first 6 months. Actually started already in fall. So it's a better outlook, people are more confident, which you also will hear if you listen to the chair of the Fed, Janet Yellen, or if you listen to other forecasters. Most people are quite confident, looks quite good. And that's very nice. So from this on to this month's analysis, which is H&M. H&M is a Swedish retailer. It's a really big company. They are a fashion retailer. You probably know about them. You get 5,000 stores. They're in 66 countries. Their sales 200 billion SEK. And of these 66 countries, they serve 41 of them online. But the bad news is that they've had problems the last couple of years. And that's because sales have not performed the way it wasn't expected. And they have historically grown around 10% in like-for-like. Like-for-like is like same store sales. Sales in a store that's been open for a year. It's come down from being around 5 to 10, even more sometimes, down to, let's say, plus minus 0. Sometimes it's negative, sometimes a little bit plus. So, in the wake of this, margins has also come down from around 20% to today's 12%. Which of course is not good for the stock market price. So we had the stock coming from 350 all the way down to 200 crowns last week, and today we're trading at 210. So this is the bad news. Okay, the good news is that these online stores, we think, they grow really fast. They have a growth, which is a G here, or 25% per year. We think this year it's going to reach around 30 billion. Still quite a small part of the 200, but with this growth it's going to double quite quickly and become a substantial part. And this is also growing by, as I said, 25%. So this, we think, will translate that the plus minus will go up, so we're going to see little growth again. And when you have little growth, it's easier to improve margins. So we think that with some good luck, some good action here in the online market, these guys are going to up their margin to 13%. It may take 2 years. In that case, earnings per share will be 15 crowns. It's trading at, as I said, 200. And when we put these figures into our model, we get 13% margin in a couple of years' time, translates to a price of 240. Today's price at 210 indicates a margin at 11%. Some big international brokerage houses believe that it's going to be even worse than this. We hope this you will see the bottom here is going to start improving. So to sum up, we hope that we've seen the bottom in the downturn of the trading conditions for H&M. But I'd also like to add that during the first 6 months this year, we think there may have been a bit of a miss in their offering, you know, not really clothes that sold really well. That happens sometimes. Last time was a big mistake, was maybe 15 years ago. This is not really big, but we suspect there's been a bit of a problem getting the things off the shelf, and that has increased the stock hold, the number of clothing they have in stock, and been bad for margins because they need to make extra sale on these products. So second half this year we hope it's going to be better, and we think the market is going to bottoming out here, and if it does, we think it looks pretty nice at 210. So that's why we have bought some stock in the fund at the moment. Thank you.